This week, we are talking livestock slaughter, cold storage, and cattle on feed numbers. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner, with us as always to talk all things markets, livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
All right, we're going to break down those reports coming up in just a little bit, but first, let's recap what happened this week in the markets.
Yeah, so it's nice to have another week where we're generally talking about positive news when it comes to prices this week. Starting on the cattle side, we're going to call live fed cattle up $2.45 this week. We got north of $1.90 again on fed cattle this week after what had been several weeks of what had been lower prices. So kind of back to where we're near record levels. The feeder cattle markets this week were anywhere from $1 to $4 higher. And on the future side, the live cattle futures for December were up $1.90, and we saw the November feeder cattle contract that was up $1.40. We also saw choice box beef up again this week, up $4.50. That puts it nearly $16 above where it was a year ago at this time. And on the hog side, cash barrels and gilts were $1.45 higher this week. We also saw the December lean hog futures contract up $1.75, and the pork cutout value gained nicely this week as well, up $2.75. That puts it about $11 above where it was a year ago. Strength in bellies, hams, ribs, all were helpful on that pork side this week.
Belly sure saw a big uptick this week in prices, and another strong week. As we take a look at some of those heading into this holiday season, could we potentially see a little bit of demand up as well? Thinking hams, bacon, some of those types of things that we feature during the latter part of the year.
Yeah, so when you see the news we got, this week of higher prices yet again, it kind of makes one wonder whether or not we're going to be at higher levels as we get into what normally is the heaviest supply part of the year, and maybe talk about demand that continues to look fairly strong for both beef and pork as we look ahead.
All right, Scott, let's take a look at those slaughter numbers for both beef and cattle, or beef and hogs this week.
Yeah, for the week ending October 26th, USDA tells us a run of 623,000 head of cattle this week. That's 15,000 more than we did last week, but down 12,000 from what we did a year ago. And on the hog side, a run of 2.593 million head of hogs this week. That's down 9,000 head from what we did last week, and down 18,000 head from what we did last year.
And when we take a look at those numbers year over year, where are they setting?
Yeah, so cattle slaughter is down 3.8%, while hog slaughter is up 1% year to date.
All right, let's start with livestock slaughter. As we take a look at that, how are things looking in terms of both beef and pork production?
Yeah, so starting on the beef side here, so September 2024 beef production, 2.2 billion pounds, Meghan. That was actually 2.6% above what we did October of 2023, which I've talked about this a few times. We're getting closer and closer to talking about total 2024 beef production above 2023 levels. Who would have thought we were going to talk about that by the time we got to the end of 24? When you look at year-to-date numbers, we're just down 0.3% in terms of beef production. And on the pork side, again, 2.2 billion pounds of pork being produced in September of 2024. That's 2.1% higher than what we did in September of 2023. And we're 2.1% higher on production this year when we look at the year-to-date numbers relative to 2023 as well.
Obviously, I would assume heavier weights are contributing to that as well, and something that we've continued to talk about. Is this a pattern that you expect to see continue well into next year, especially when we're looking at corn and feed prices and feed input prices in where they've been lately?
Yeah. So I think you hit the nail on the head of, as long as we talk about feed costs that are where they sit today or lower, we're going to continue to see weights fairly heavy. When you look at cattle, so September of 24, the cattle average dressed weight was 862 pounds, up from 828 pounds in 2023. And even for the hog side, this month in particular, the hog dressed weight of 212 pounds compares to 209 pounds a year ago. So in both beef and pork cases, that helped overall production to be higher than otherwise would have been the case.
Beef cow slaughter is the one number we continue to look at. As you take a look at the number for September of this year compared to where it was in September of 2023, what's your takeaway?
Yeah, we continue to see beef cow slaughter lower. I don't think anything's changed in terms of, we know we started the year with fewer total beef cow inventory. It's not, I guess in some ways it's not surprising beef cow slaughter is then lower from that lower beginning inventory, but down 51,000 head in September. That puts us down 411,000 head year to date, or 16%. I'm not sure that still is a big enough drop in beef cow slaughter for a large increase in beef cow inventory January 1 of 2025. But certainly we continue to see tighter beef cow slaughter numbers as we've gone through 2024.
Cold storage numbers out this week as well as we take a look at ending stocks for both beef and pork. What are you watching there, and what is it showing us?
Yeah, so I think in both cases we continue to see ending stocks below year ago levels. 414 million pounds of beef at the end of September of 2024. That's 1.7% below where we were a year ago. In line with where we've been, we were down 1.7% in August relative to the previous year as well. So not a lot of change. On the pork side, we're down 0.3% with 460 million pounds in freezers as of the end of September. In August, we were down 3%, so a little bit of difference in terms of we seem to be growing back towards where we were a year ago levels when we look at this month of data from pork ending stocks. Overall, I like to come back and say you take beef, pork, chicken, and turkey, all four, 2.1 billion pounds of those four products in freezers, down 2.8%. Relative to where we were a year ago. So I guess the news generally is we're not seeing a big increase in cold storage stocks that would suggest any kind of real demand weakness as we look at this data out this week.
I feel like that's pretty good news considering where prices of beef are specifically, and what's been going, thinking about bacon prices or some of those other protein prices.
Yeah, so despite the concern we've talked about for much of the past 15, 24 months has been, when the consumers see prices that are too high and they change their pattern of buying. I know we've seen some of that happen, but generally demand has held in fairly good despite the fact we're pushing high, in some cases, record prices at consumers. No real change, and we'll have to keep monitoring that as we move forward.
All right, cattle on feed out this afternoon. As you take a look at those numbers, let's just kind of start from the beginning, and then we can get into some of those other figures, specifically thinking about heifers on feed. Yeah.
So USDA told us we basically were unchanged in terms of relative to a year ago in terms of on feed as of October 1st. That was very near the pre-report midpoint. That pre-report midpoint was 99.7. So we haven't really seen anything that says we're tightening or aren't keeping yards full at this point. When we look at the placement numbers, placements relative to a year ago were 98.1% according to USDA. That was a couple of percentage points above the pre-report average. That pre-report average at 95.8 would have suggested fewer placements going forward, and a fairly large range from 94.2 to 99. I'll just admit that there was a lot of pre-report folks that were at the upper end as well. So I don't know if there was a lot of surprise in terms of what we got out of cattle on feed when you look at those top level numbers.
I think the big takeaway on this one would probably be heifers on feed, especially as you and I have continued to talk. And really the industry has been talking. We haven't had an inventory report since January. We won't get one for another 3 months. And so we've got to look at places where we might be showing some signs of retention or some signs of expansion. And I would assume this report this month is not telling us that we're seeing any of that widespread.
You're absolutely correct. Not even a tick down in terms of what we saw. So 40% of on-feed inventory October 1 was heifers, keeping very near where we were 3 months ago as well in terms of the percentage of heifers on feed. You look at all the history that we have available to us in terms of heifers on percentage of heifers on feed. There's just none of that data suggests any kind of heifer retention is really going on. The question was posed to me again this week: why is this happening? And I don't think there's easy answers to that question, but I do think dry weather in some parts of the country have come back to make people yet question how quickly they want to grow. And when you have prices where they are today, sometimes it's better off to let somebody else own those heifers.
How much do you think this dry spell, I had this conversation with somebody in Missouri earlier today as well. Going into the late summer, you all, a large cow-calf state, had a lot of grass and things were green and things were lush. And I would assume that would maybe start to spur some conversations about it's time, let's hold heifers back, or let's make that investment. And then it turned dry, and 95% of Missouri is in some sort of drought. So how much does that dry weather, I mean, Kentucky is in a very similar situation. We've not had a lot of measurable rain outside of the hurricane at the end of September. Does it just change the tone and change the trajectory of maybe a feeling of growth and it's time to, maybe it's not time yet?
Yes. So there's a lot of different parts to that question to try to deal with. So number one, I'll say, when you look at a state like Missouri, we had enough rain at the right time to put up a lot of hay this year. So hay supplies came back to maybe what was more normal. When I talk to producers now, many of them are saying they're already feeding hay, but they have enough hay to do this given where they started. I think, though, it makes them, they think back to the length of the last drought that we went through, and it wasn't short term. So they don't want to completely get rid of all of their hay stocks and be trying to expand at the same time. So I think it has kind of changed the mood a little bit. I do think, though, you look at the bottom line and it looks more positive in front of us. I think that has some producers at least looking. So I think there's a mixed bag when you look around a state like Missouri. I think you have some folks who are trying to expand, maybe aren't setting in the worst of the driest areas, but those setting in the driest areas, so Southwest Missouri, where typically we have a majority of our cattle in the state, has been very dry. And so I think that has slowed what might have otherwise been some expansion trying to happen in that part of the state as well.
This is the time where, like, if you had a magic 8 ball or your crystal ball was not cracked, you'd be in a really good position.
Yes, and I think many of them see where prices are today, and as much as I say, I think there's more downside risk. A lot of them probably see that same downside risk. And do I really want to expand right now? Perhaps the age of the average beef cow operator in the state has something to do with some of them not wanting to grow, given where they are in terms of age and not wanting to be growing that herd right now. However, again, I'll say I think the bottom line looks better. And at some point, that profitability will get someone to decide to take the risk to think about expansion.
All right, Scott, as we wrap up today, looking ahead to next week, restaurant performance index, jobs report. I would assume we're looking for some demand indicators there and to see what the overall economy is doing.
Absolutely. And as you recall, on the restaurant performance index, we've kind of seen a little bit of a drag, if you will. Can we get some turnaround in terms of that restaurant performance index, or those prices that consumers see going to restaurants going to continue to not give us the best news on that restaurant performance index? We'll wait and see what we get next week.
Scott, it's always great to see you.
Likewise, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what's going on in the commodity markets twice a day, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.